So good evening. So the last time we spoke about retest, rejection, and reversal, but I wasn't able to record it. So I hope today will be different. So now I know right now we are almost done with the class, which is we have treated almost all the topic. So and during all this class, we're always talking about reversal, rejection, and retest. So I'm sure everyone is familiar with reversal, rejection, and retest. So, but I'll just say something here that you guys should take note of. I'll say something. So, because this class is meant to be a question and ask class, ask questions, but I don't think that will be possible today. So I'll just treat on this topic. And when I'm talking about the last topic, which is confluence, after confluence, you guys can ask your questions. Now, assuming this right here, this zone right here, assuming this is the support or the demand zone, and the market is actually coming down, making a series of lower lows and lower highs. Market is coming down. Definitely, you should expect a rejection at this place because this is the support. After the rejection, you should see a confirmation or a confirmation like this, which should be a bullish candle or that will engulf this one, showing you that okay, sellers have actually lost control and buyers have fully stepped in because number one, you notice first a retest, you notice a long wick showing rejection, and you wait for your confirmation to show that okay, this zone is standing. But now, the part I want to draw out to you is that sometimes you will notice this formation. That's why it's always good to wait for your confirmation. And suddenly you just notice the candle just come in. Suddenly the candle will just come here like this. Instead of you see a bullish confirmation, you just see another bearish candle. And you see a long wick like this. So now if you see this kind of setting, just know that okay, this place actually was the previous support, major support that the market respects. But something happened here. The market didn't respect it. The market broke it impulsively and came here. And when the market got to this particular new zone here, this new created zone here, this new zone that is created, what happened? The market respected this zone, rejected it, and you notice a confirmation from here. You notice a bullish confirmation, right? So it shows that the market came here to respect this zone, and there was a bullish confirmation, and the market will go up, continue to go up like this in a bullish form, like this, making two bullish moves. Then suddenly, market will just begin to come down again. Now I'll explain that in a bit. To retest this new support that was created, and when it gets here, it will create what we call double bottom. Now, that last time I was talking about it, I didn't call it double bottom because we haven't treated chart pattern, so I didn't want to create confusion. But the literal sense of what is literally called is called double bottom, right? This is called a double bottom formation, and suddenly you just see a bullish confirmation, impulsive, big bullish body, and the market will begin to go up and up and up and up and up and up and so forth and so forth, so on and so forth. So now what happened here? This place right here, that you notice the first rejection here, this place was actually the major support, right? But what happened while we were waiting for our confirmation? What happened? A bearish move came, an impulsive bearish move that the body broke out of the major support. You know, the body broke out of it and came down here, but there was a strong rejection here, and the body closed here, and this breakout here, And this rejection shows that this place is no longer the major support, but a new major support has been created, and this particular place is the new major support. Do you understand? So every time this setting happen in the market, just know that okay, you notice two bullish move to the upside or a big bullish move to the upside, and it will come back to retest it, creating what we call double bottom and begin to go up. So the reverse is the case for double top. So anytime you see this formation, if it doesn't respect a major zone, just know that it has broken it and it has changed support to this place where this new candle formed, this new bearish candle formed. Just know that it has changed support from here to this place. And come here and mark this place and know that okay, suddenly it will go up and come back to test it, creating a we call double bottom. And I'm sure you guys can recall when I spoke about this in the last class. So this is what usually happens. This is what usually happens at a zone. So you guys should take note of that double bottom. I know you guys read chart pattern. So that's why I spoke about retest, reversal, and rejection before I spoke about chart pattern, because chart pattern is all about breakout, retest, and your entry. Now, sometimes you can trade within the chart pattern, the chart, or you can wait for a breakout of the chart and trade it. So let me show you an example. I took some trades this week. So let me show you. There was a good example of a breakout, of a reversal, a retest, and a rejection. Let me show you an example of this. Okay, look at this now. Look at this. Mr. Kunle has joined us. Welcome. Now look at this. You guys can remember the last class, I was talking about the market. I said it was going to come down here to test here, to test the spring here. Yes, I'm recording the class. Yes, I am. I'm recording. Remember I told you that I'm coming, that the market will surely get back here to test this particular place as a spring before going back up. Look at it. It's actually coming down to test it. So I hope you guys are studying those materials I gave to you. So now, yes, USD is a good example. Look at this in USD Look at it. This right here is what we call a descending triangle. If you guys can recall, this is a descending triangle. I hope you guys can recall when we spoke about chart pattern. This is a descending triangle. What happened? The market obviously broke it to the upside, right? And we tested it. The first retest was here. After this retest here, I entered immediately. Do you understand? I entered after this retest here. And I was in, I think I made like 20 pips profit. I used 0.1 mini lot size. And yeah, I entered here. After this particular retest. I waited for the confirmation. After this confirmation, I entered here with this new candle here. It broke out of it. We tested it immediately with this bullish candle. I waited for the confirmation, and I entered after the confirmation. So, and I took my profit here. But when I noticed that okay, it formed a little a spinning top here, showing loss of momentum, I noticed that okay, the market is coming to maybe form a series of higher low, then begin to form a series of higher high, higher low. Do you understand? But this is a clear example of a breakout, a retest, and what? A reversal. Look at it, it broke out of it. We tested it with this bearish candle. Look at the rejection, creating a spinning top here, then suddenly broke out. So I took this trade here. I remember taking this trade. I think something like that happened to us, JPY. Yeah, I took JPY too. Same thing happened here. I took this trade here. I think I made like close like 80 pips from here, like $80 pips from here, from this trade. And I set my take profit here at this zone. Yeah, it was marked out. I noticed the breakout here. Look at this breakout here. After this breakout, I waited for the what? Retest. Then I waited for the confirmation. This was the confirmation, this one. And I entered after the confirmation, and the market began to go down. Began to go down. This right here, this, my friends, is what we call breakout, retest, rejection, and reversal. After every time there's a breakout, there will always be a retest of that zone. After a retest, you notice a confirmation. Use for your confirmation candle, then enter after the confirmation. So I think same. I think I took. Okay, let me look for on that pair. I think AUD USD. Okay, yes, AUD USD.
Yeah, hello.
Yes, I can hear you.
Yeah, I think something like this happened yesterday too on Gold Spot USD.
Okay, let me check it out. Let's go there.
Um, but it's not a descending triangle, it's an ascending triangle around 215, from 215 to like 8.
Okay. Hmm.
So it started from like around 415. Okay, I'm on it now. 415. The ascending started from like 415. And then by the time it was around what is this time now? 8, 10, 12, 6. So like 2 in the morning. I mean 2 a.m. 2 a.m. So by the time it was 12 in the afternoon, it broke out of that triangle. Okay, you've seen it already.
Yes. What time frame are you
I'm on
trading with?
15 minutes time frame. 15 minutes
Okay,
time frame.
you're
15
trading a
minutes
15
time
minute
frame.
time frame. Okay.
Yes,
Okay. It broke it to the upside or downside.
downside. And it sold for, I mean, it was a massive sell.
Okay, this is what you mean here. This is
Yes. Let me see. No, that's no. Is this one? You've gone past it too.
is this one particular one? Is this one? Yes.
No, no, not this one.
This
Come,
one.
come, come forward. Yes, this one. Yes, no, this one.
This one.
No, not this one. Not that one. This one. Yes, this one. This one you're touching now. No, 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 no. The first one you touched before that. No,
This
not this
one.
one. Not this one. Yes.
Hmm.
No, this one. This one was the previous one, but the next one is what I'm talking about actually.
This one here.
No,
This
come
one.
forward a bit. No, no, no. I mean, come forward. You're going back. This one, yes, where you are right now.
Yeah.
Yes,
Okay.
yes, that's it.
Oh
It
yes,
broke
that's
it
cool.
and tested it.
That's a
It
good.
broke
That's
it,
good eyes.
retested it.
That's good observation. Yes. This
Yes,
one is
and it
an
was about
ascending.
1,000, 1,300 pips or so. It was massive.
Whoa. Yes. Oh.
I'm telling
1,420.
you, it was massive.
You see, I'm happy for this. You observe the chart pattern. Yes, this is it here.
Yes, I
This
did.
even this one too.
If not because you say we should not trade, me I just dey look. I just dey look and say, hey, see money they go, see money they go.
That's the thing about training. During trainings, you come account how you come across opportunities like this. The fact that you can spot it shows that you are getting better. Do you understand?
All right.
And that is part of the training to test yourself and
Oh
know how
yes.
to understand how much you
Oh,
can understand and interpret it. Now, the fact that you can see it shows that you are getting better. Look at even at this point itself here, this particular site
yes. This. Okay.
is forming a chart pattern here.
Oh yes. I marked it on my trade here too, but it's not a clear one yet. It's respecting the 200 EMA.
This was yes, when as it got to the 200 EMA,
The EMA was a resistance that
yeah,
became
it
a
serves as a
support.
resistance. But
Yes.
something is going on here.
Yes. Now it became
Look at it.
mm-hmm.
Okay, this is not a rising triangle. This is not a rising triangle. This is a what we call this one here. Remind me, please. This chart pattern. Can you guys recall?
Which one is
Remind
that?
me. This chart pattern here. What do we call this chart pattern?
It's in it. It's on the trend line. The chart pattern. Okay, this is W, right? One, two, double bottom.
This is not double bottom. I'm talking about the chart pattern. This is a chart pattern
Double
here.
bottom with the base trend line.
This is not a double bottom chart pattern, please. This right here is a bearish wedge. This is a bearish flag, rather. It's coming from the downside and beginning to form bearish spread. This is a bearish flag.
Okay.
Don't forget. This is a bearish flag pattern. You guys should watch the video again. This right here is a bearish
Okay.
flag pattern. And look at it. This particular 200 EMA, look at, it's just serving as a temporary push-up. Look at it. It's creating a series of higher high here, higher high, higher low, higher high, higher low. Then it created a lower low. Then went back to respect this trend line. Then suddenly it came here and created a lower low here.
Yeah.
And it's coming back here to hit this trend line and go back up before it break out,
Yeah,
the
but no,
retest and a rejection.
after breaking the 200 EMA, it came back to retest it,
Yes, it
and it
broke
went
it.
up. Instead of going up, it just came down again.
Wow. Look at your
And
observation. This is amazing. Yes.
So what the price action at this stage right now?
What do you say?
Breaking it, retested it, and then instead of going up, there's a price action on top of that place that is still respecting.
Yes, it's
But
expecting
it's
this,
looking
this
like
particular zone here.
just
This particular resistance, more
ranging.
resistance here. We expected this previous resistance. Can you see? This
Okay.
previous resistance. That's what you respected
Yes.
here.
Yes.
But
Yes.
I like your observation. Broke the 200 EMA and immediately retested it. So it's coming back here to hit this place, this trend line, then go back up, or it might just break it, retest, and begin to come down, start coming down. Do you understand? You understand?
Very well.
So yeah, I'm happy you are spotting this.
Very well. Very well.
I'm happy you are spotting this stuff. So you guys should think. Left to me, I want you guys to still train for like a month. Do you understand? Because you can do it yourself. This thing is a do it yourself thing. Do you understand? Because if you have to do it yourself to be once you can do it yourself, I'm telling you, you'll be smile. Like it's better to do it yourself. So you own your risk, you own your profit fully. So I told you the market is always forming patterns. Look at it here. It's forming a pattern here. It's formed a pattern here.
As a descending triangle.
Yes, kind of a descending triangle. And if you if you actually marked out this previous zone here, it's a clear descending triangle. Then it broke it to the upside. It broke it to the upside, came back to almost, it didn't even retest it until it came here to retest it here. And started going back up. Then suddenly it came back again. So yeah, actually, now, okay, how can I say this? Now, like I always tell you guys, this is a lower time frame, bro. I told you that.
15 minutes.
Yes, I told you something. If you remember in chart pattern, I told you that every chart pattern is as a result of a corrective move. I told you that chart patterns are corrective moves. So if you check that corrective move on a lower time frame, you notice it's forming a chart pattern. Don't forget what I said, what I just said now. Every chart pattern is as a result of a corrective move. If you go back to the lower time frame to check the corrective move, you will see that it is forming a chart pattern. So now there's a bigger picture in play. And what's the bigger picture? Daily time frame. Now the daily time frame will tell you the major trend of the market. And the 1 hour time frame will tell you what is happening in between that trend, in between that daily time frame. That's why it's always good to have the overall picture and enter in the lower time frame to see trade opportunities. Do you understand? So now let me show you something. Let me show you guys something here with the drawing. Now, on the 1 hour time frame, the market might be doing like this. On a daily time frame, back. On daily time frame, this is an higher low. Now, this particular retracement you are seeing here like this, on a daily time frame, this retracement you are seeing here, let's assume it's a daily time frame, this retracement you are seeing here. If you check this retracement on 1 hour time frame, it will be a series of higher highs and lower highs and lower lows. Am I lying? Can you guys hear me?
That's very well.
I said on a daily time frame, you are seeing higher high and low, right? Now I'm saying imagine it's a daily time frame candle. Now it's forming a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? Now I'm saying if you should check out this particular lower low on this daily time frame, it will be, if you check this lower low here, this higher low rather on a daily time frame, it's on 1 hour time frame, it will form like this. It will be like this on a 1 hour time frame. It will form a series of lower low, lower high, lower low, lower high, lower low. And it will form it in a chart pattern. It will be forming that series of lower high, lower low in a chart pattern form. Do you understand? But now you are
Very
seeing
well.
lower highs on 1 hour. It doesn't mean the overall trend is downtrend. The overall trend could be higher trend, could be an uptrend rather. But on the 1 hour time frame, we're seeing downtrend. So what am I saying is I'm saying that's why we always enter lower time frame to spot entries. Do you understand? To spot quick entry, enter quickly, leave quickly. Simple. Do you understand? So it takes studying the overall chart and know your entries, overall charts and the lower time frame, knowing how to use the overall chart and the lower time frames together. That's what will really save us. That's how to really make profit on this market. Do you guys, do you understand what I just said?
Yes, yes. So when we see the retracement on a higher time frame, checking it on any lower time frame will most likely give us a chart pattern. And
Yes.
so it's
And it's
easier
performing a
to read
series
the
of
chart
lower low,
pattern
lower highs
and then you
till a
can plan
breakout,
your entry.
and it will keep on going back in the uptrend as it is. It keep on going in the original trend, which is the uptrend. Do you understand?
Very well.
So once you can decode that relationship between lower time frame and higher time frame, I'm telling you, this thing will be sweet. I'm telling you, trust me, it will be sweet. It will be very, very, very sweet. Look at this now. Let me show you on daily time frame. So I was thinking I would talk more about retest, reversal, and rejection, but I think we've spoken a lot about it because we're always talking about retest, reversal, and rejection, breakout of zones. So now, as I'm saying, look at this here. This is retracement, right? Can you see it? Mr. Tony, Mr. Kule, can you see this is a retracement?
Yes, I can see it. I can see it.
Yes, let me bring out the Fibonacci. This is a daily time frame. And on the daily time frame, it is forming, this is what we call bullish flag. This is a bullish flag on the daily time frame. Can you see? It's forming a bullish flag on the daily time frame. Now, if we should check it on a monthly time frame, can you see it's a retracement? Can you see that? Can you see, Mr. Tony?
Can we bold in it? It's squeezing up. I really can't see it very well. I'm actually using the phone. The
Okay.
system is not connecting on Zoom, so I'm using the phone.
Can you see this? Can you see it
Oh,
clearly now?
yes, it's clear
Can you
now.
see that this is a
Yes, it's clear.
retracement? This is an up move, and
Yes.
this is a retracement from an up move. Yeah. So this is 1 month time frame. Now I'm saying, let me show you what this retracement is on a daily time frame. Look at it. On a daily time frame, it is forming a flag, a bearish, a bullish flag. Can you see? That little retracement you are seeing on a 1 hour time frame is forming a bullish flag. Do you understand? So now the overall trend on the monthly time frame is showing uptrend, and it's showing a simple retracement.
Well.
So now it's retracing, and that retracement on a daily time frame is forming a series of lower highs, lower lows, and it's retracing in a chart pattern. So for it to resume in its uptrend, you wait for a breakout of this daily time frame. And if you check it on a 1 hour time frame, on the original time frame, which you are checking it from a monthly time frame, you see that it has finished its retracement and it will continue in its uptrend. So that is how it is. So now, this thing I just said now, I just reviewed something to you guys. It will take time to practice, but just trust me, we are in this together. So this thing I said, you guys should watch it over again and get it and extract information of it. So you guys, if you watch this video over and over again, you get it. So I told you every corrective move, that is after an impulsive move, a corrective move on a lower time frame will always form a chart pattern. And in between that chart pattern, you will find trade entries. Do you understand? And if you don't want to trade within that channel, you can wait for a breakout of the channel and you can trade the breakout. Do you understand? That's how you always find entry on the market. Do you understand? Do you guys understand?
Very well, sir. Very well. I understand. Very well. Very well.
So now these things you are seeing like this now is in now on a daily time frame. This whole thing is forming a bullish flag. But if you look at it on a 1 hour time frame, it just looks like You can draw. That's why you see me. You see me. I will draw a daily trend line. I will draw 1 hour trend line. Do you understand? Because I'm looking for trade opportunities. I know that okay, on a daily time frame, it's forming a series of higher highs, lower lows, lower highs. But on a daily time, on a 1 hour time frame, it might be forming a series of higher highs, higher lows. So I'll just look for good opportunities, enter and leave, still respecting the overall trend. So, so yeah, that is it here. Look at this now. On the 15 minutes, we drew this on 15 minutes. So people, that's it though. That's it. That's how the market is. It's not as we've treated virtually everything. So next class we're talking about confluence trading. I will explain what it means to be a confluence trader and the parameters to consider before taking a trade, and how to use everything using your 200 EMA, using your RSI, using your trend lines, your fixed lines, using your Fibonacci and everything to enter a trade. You understand? So once you have once you have 3 or 4 confluences, that trade is always golden. When you have many conferences, the trade is always golden. So it's always good to be patient, wait for it. Remember your order of events. So all you guys should always remember that. Please, always remember that. Always, please, always, please. I need you guys to always remember that, please. Now, this thing that is happening here, I think the news came out. So I think it was actually bad euro news and actually fell. So there was a good news on US news. US had a very positive news. The CPI was good. The minister, the president of the chairman of the bank, Federal Reserve gave a positive remark. So that's why compared to Euro USD, the euro fell. Even though euro too had a very good news today, the employment rate is high, but when the US news came out, immediately dropped. So yeah, my people. So if you guys have any question, please ask now. We have 8 more minutes for the class timeout. If you have any question,
Hello.
yes,
In
I
the
can hear
book,
you, sir.
in one of the books you gave us,
Yes,
the one that talked about forex for beginners,
yes,
the 18-page book, they talked about when not to place a trade. All right. So, and one of the times that we're told not to place a trade is when there's a news.
when there's a news.
Yes, and you talked about news a lot.
Yes, and that tell you guys where you can get news.
This is several times when we should not place a trade. It's not just about, I think they mentioned about 7 things. Bank
That's good.
holidays, don't place the trade. Asian session, don't place a trade. Friday afternoon and weekends, no trade. Then they said release of news events, don't place a trade. End of December, don't place a trade. Don't
Yes, so
place a
don't
trade.
please, don't trade
When
December time.
angry or when you have
Hello?
December time, don't place a trade. When you are angry, you are frustrated, don't place a
Don't place
trade.
a trade, yes.
Hello, I'm with you.
Please, everything they said there is that keys, that
And then
germane.
when you are overnight, don't leave it. Don't place a trade overnight.
Yes, don't. Except now, there are exceptions to those
On
rules.
the emotion one.
Can you hear me?
Okay.
There are exceptions to all those rules. That's why they are called forex for beginners. Do you understand? There are
Yes, I
things
can hear you.
beginners need to take note of, because um beginners have not mastered their psychology and they've not mastered how the market works. That's why if they trade when they have bad emotions, they will lose. If they leave that trade overnight, it might hit their stop loss. So there are things beginners always fall victims to. That's why they need to place them there. But if you've mastered the trade over time, that is, if you have become a guru at it, come on, you can break the rules. Do you understand?
Very well.
I'm not saying break the rules now, oh, because we are still beginners. Do you understand? But I'm saying take note of them, apply them in your trading plans. Do you understand? And observe why they said you should observe them. Observe why they said you should not trade during those instances. Do you understand? Observe why they are saying don't trade with those instances. If you're angry, December is actually, I don't even advise people to trade in December, which is bank holiday, Christmas period. Most banks are in holidays. So the volatility is always high, easily manipulated. So except you are good at it. Now, as I'm saying, don't trade in December. There are people that trade in December. You understand? And as they're saying, don't leave your trade overnight because it might hit your stop loss or because something might happen overnight. News might come out during your that time zone. There are some people that already factor in all those equations in that trade that they trade. Sometimes they can leave a trade for 4 days. Do you understand? So I'm saying all these things, you break them the moment you master the market. But for now,
And
consider those things.
that's what I'm asking. They wrote here, don't trade on the release of news events.
Yes.
You know, and fundamentals is one of the things that you said we should. In fact, I blew out an account because of a news.
Yes.
There was an account, yes. So I think I explained to you that it was a news and the trading setup was good and every other thing was looking good, and all of a sudden the thing
The
just
news
started
came out
moving
and it reversed.
and it
Now,
was in a matter of minutes. Bam! We just pump up like that,
yes.
and even before I could say Jack Robinson.
Ooh, it's faster than that. Now, let me tell you something about trading news. Now, I trade news a lot. I trade fundamental. I love fundamentals a lot. So, do you guys know Forex Factory? You guys know Forex Factory? Okay,
No.
I'll give you guys places where you can get fundamental news. Investment.com, investing.com, and Forex Factory. They give you guys good solid news. Now, there's something about trading news. Now, if you are trading the market, 20 minutes before the news comes out, make sure you close every trade.
Okay.
Do you understand? If you are trading a pair that a news should be coming out in maybe the next 2 hours, do you understand? Close that trade 20 minutes before the news comes out. Do you understand? And after the news is out, enter the market 1 hour after the news is out or 30 minutes after the news is out. Do you understand?
Okay.
That is how to
Do
trade
not
news.
do not
Close it, the
immediately.
trade 20 minutes before the news, and enter the trade 30 minutes after the news or 1 hour. That means to know if the news actually has effect on the market or the news doesn't have any effect. Do you understand? Because trading fundamentals and technical are the good way to be profitable. I love trading fundamentals and I love trading technicals together. So now that's what I'm saying. Over time, the more you spend time in this thing, the more you know how to break the rules. Those rules are there to stop you from making losses as a beginner. Do you understand? But once you've mastered the market and you've understood why things are the way they are, you will know how to break those rules or how to imbibe those factors in your trade and you'll be fine. So my people, the class will time out now. So see you guys later. Next class.
That will be on Friday, right?
Yes, on Friday, which is the last class before the 2 weeks break. The 2 weeks break is for you guys to revise all you guys have been taught, revise everything. Because after that 2 weeks break, you are entering 1 month practical.
When is Usman taking us?
On Sunday.
Sunday, okay. All right.
Yes.
All right.
So you guys have a lovely Wednesday night.
Thank you.
Odabo.